Hey, welcome back to Lamb's Cryptoverse. Today we're going to talk about 7 charts for 7 days. And it's 7 and 7 as you know because crypto never sleeps. But we're going to be also focusing and mostly focusing on the macro stuff because remember, macro is Bitcoin and Bitcoin is macro. So let's get started. These charts are brought to you by Charlie Bellello from Compound. So the first one we're going to talk about, the first one of around 7, is housing. As you know, housing has been really weak because interest rates had one of the steepest inclines on record. And here you can see the National Association of Home Builders Housing Market Index has declined substantially. And remember, if it's below 50, conditions are considered poor. So housing is weak. And I think I don't need to talk to you too much about that, because everyone knows that housing's in bad shape. Wanted to talk to you about, and maybe let's move this one over, the sales price. Okay, the sales price has been declining. And as you know, historically, housing prices do not decline. If they decline, it's usually very little. What happened in 2005, the great financial crisis of 2007, 2008, housing prices declined substantially. They only had a decline in history as far as I know. They only had a big decline back in the last time there was a lot of inflation. Back in the early 1980s, housing prices declined around the mid-single digits. And so we had the decline now. We had the decline of the great financial crisis and the housing decline of 1981, 1982. So what I like about this decline that Charlie Bellello is focusing on is that you have like a lower bound. You can see that prices decline from top to bottom at 33%. Let's call that 30%. And prices now declining probably around, let's call it 10%, even though it says 8. It's probably 10% now. So if you take a limit of 30% and then another bound of 10%, which we have now, the middle number is about what, 20. So I think that's a downside case because you have to remember, during the GFC, we had something crazier than speculation. We had that too. A lot of speculation. People bought second vacation homes, second homes. They took out HELOCs, basically home equity loans. But the thing is leverage. We had crazy leverage. You remember we had New Century, Prime Broker. We had a lot of, not Prime Broker, we had a lot of prime loans. What do you call them? I'm trying to think, I forgot what they called those. But basically we had a lot of risky loans from Countrywide Credit. No docs were basically not banks, but non-banks like Countrywide Credit and New Century were given loans without documents. It was a lot of crazy shit going on. We don't have that now, so I think the downside limit is not even 20% for housing prices. It's still a lot. It's going to be the second most in history, but just keep that in mind, that housing prices are going to go down, but not as bad as 2008. And what I want to show you here was leaving Charlie Bellello, we have something called the Truinflation Index, which I like. This actually shows you what inflation really is, and we peaked back in, it depends what index you're looking at. We peaked between March and June. It depends on what sub-index or what data source you're looking at. But what I wanted to focus on was housing. Housing is having the second most decline of any sub-index category. And these categories you can see are housing, transport, utilities, healthcare, and on and on. So the biggest decline has been in transport. If you look at, for example, car prices, especially used car prices, they're falling off a cliff. And that's why Carvana is having issues because of prices. And the housing index is also declining very fast. It's declined 3% versus the previous quarter. Of course, you can't see any of this in the official CPI report because it's a really lagged index. So let's move on. The next thing Charlie focuses on is he talked about how housing's going down, and now he's saying that you're seeing corporations have lower earnings growth. And here he's showing the S&P reported GAAP growth is now declining substantially from 2021. It's actually down 10%, and I think that's going to go a lot lower. I think we're going to have a hard landing. And now he's shown, and this chart is showing the 30-year rate versus the 1-month Treasury rate. I've never seen anyone do this. Usually it's what they call the 10-2. I look at the 10-2, meaning the 10-year versus the 2-year rate. And I also look at the 30-year rate versus the 2-year rate and the 30-year rate versus the 3-month rate. This is another way of looking at it. But to me, this is saying we're having a hard landing. So one thing I want you to keep in mind is that there's a huge lead. When the yield curve turns negative, there's a huge lead between this yield curve turning negative and when there's a recession. And Charlie Bilella also shows some LEI index data. What I did here is I actually skipped over from showing his data to going straight to the horse's mouth, the conference board. And this is their data, the US LEI, and I'm going to focus on a few things. This just came out November 18th, and it says the conference board LEI index declined by 0.8%. That may not sound a lot to you, but if you go to the next line that I highlighted, it says LEI is now down 3.2% over the 6-month period. That's huge, my friends. And that's a reversal from the 0.5% growth over the previous 6 months. And remember, this LEI is supposed to track or precede GDP growth, so that you could actually see GDP declining at 3.2% rate if it follows the LEI. So this is really bad. And then it goes on to say the US LEI fell for an 8th consecutive month. And then there it is. You can see the decline. And remember that I should have told you this earlier. The conference board is the nonprofit organization that tells you whether or not we had a recession. And there's a lot of disputing about that. Because the conference board also likes to focus on employment or unemployment. And right now, employment is still very strong. The unemployment rate is a historical low, and I think we need to double that rate to have a really strong hard landing. And I think conference board is going to wait until they see some increase in unemployment rate before they call a recession. But as you know, many people are calling a recession. But what Charlie Bilella focused on was this, that most US LEI components drove the October decline. And this is actually called the Diffusion Index. It's basically a measure of breadth. It's almost like the Diffusion Index you see with the stock market, meaning advances versus declining stocks. But here, instead of looking at stocks, they're looking at all kinds of components: building permits, S&P 500 index, interest rate spread, all kinds of components that lead recessions. And here is a visual of that LEI Diffusion Index, and you can see it's coming down really fast. And what's funny is the conference board actually is denoting or noting in red here that this is a recession signal. So that means a lot coming from the conference board. So let's move on, because we could talk for hours about this. Now, this is very interesting. Charlie Bilella notes that the Fed is continuing to hit the brakes, but this time it's hitting the brakes for the first time. It's hitting the brakes in a bear market for the first time since the 1980s. And that's because, of course, that we have inflation. So it's very interesting what's going to happen to the economy with the Fed hitting the brakes, meaning raising rates during a bear market. So this is more evidence, in my opinion, that when we are not going to have a soft landing. I think when we're going to have a hard landing. And the last chart I want to show you is that Charlie Bilella is saying that we're going to have, that we might be near a bear market. We may have a bull market, in the stock market. And you already see the stocks are rallying. But I'm not sure about this. Remember, I always like to talk about the data. You should confirm the data with other sources of data and always know the background of the data. So like this data is from the AAII, And it looks like retail sentiment. Anyone could go on the website and say whether or not they're bullish or bearish. I don't like this one as much as II data. The II data is basically investors' intelligence. And I've been looking at that data for many, many years, like 25, 30 years. And I find that data more reliable. And the second point I want to say is that I sometimes consider the bull bear spread, meaning sentiment data, to be a short-term index or indicator. So I am not sure that this is calling a major market bottom. As a matter of fact, I don't think it's a major market bottom. I think we're going to get a short-term rally in S&P. I forgot where it was. I think it was 3,800. I think we could rally from 3,800 to maybe 4,200 at best. And then I think we're going to go down sharply because earnings estimates are going to be declining sharply. So I think we have a hard landing. So that's all, folks. That's 7 charts for 7 days. And I didn't talk about Bitcoin. Sorry. Hold on. One more thing. And Charlie Bilello talks about what Kaling usually puts out. And this is Callan, likes to put out this performance asset class. And if you look on the bottom here, they're showing Bitcoin had a 65% decline in 2002 year to date, and it's been the worst performer, and you can see it again. And they're saying that Bitcoin's drawdown over the last year is the largest since the 2017-2018 drawdown. And that's no coincidence because in 2018, we saw a tightening of liquidity. So I think that even though this Charlie Bilello is saying that, or implying that Bitcoin has one of its worst corrections, I still think this crypto winter is going to continue because the Fed's still raising rates. So that's all, folks. He's talking about SBF now. We're not going to talk about that today. So basically, that's all, folks. And thank you for listening. And be careful out there because it's looking like things are getting better superficially, I think, in the stock market. But things are going to be bad. And I think it's going to be tough for crypto. Everyone's saying we had a capitulation in crypto, which we did, but I think it's going to be almost impossible for crypto and Bitcoin to hit a bottom if the stock market, meaning S&P, has another leg of a decline coming. So be careful out there. Thank you and goodbye.